The question on everyone's mind is at this particular time is that what to do. Shall we sell or shall we not? Because to be honest, nobody knows where the stock is going. Okay, on one
Correct.
hand,
Correct.
okay, can you share the screen now? Okay, so on one hand, you can say that technically all oversold signals are met. Okay, so tendency is if it's oversold too much we should sell. Okay, that is one thing. Second thing is people will say that Palantir has not been able to save any gains, over last 2 years. Every time the gains come, it drops fast. That is also fair. So there are arguments on that side. Okay, that means Palantir can fall from here and we don't know. And if there is something in the market related to that selling uncertainty, so yeah, it can happen, it can happen. Then there is another argument is that it has crossed the 6 months and 1 year target, the high, in just a single session. And this session was very unusual. We were already coming off a very strong momentum where it has failed 10.3 twice. Okay, then there was a specific move in yesterday in after hours. It moved up in pre-market, it moved up throughout the day, and then it moved up in after hours. So this hasn't happened for a very long time. Okay, so this kind of a strength to me is unusual. So whether this strength fizzles out, I don't know. Just because it's oversold, I'll be, so guys, please remember, no financial advice here. I'm just sharing my views. That because I haven't seen this kind of a strength for a while. Okay, now thing is, when stocks make a run, they can stay oversold for a very long time. So there are arguments on both sides. Okay, so if somebody feels that there's a lot of money on the table, they want to take some money away, I think by every mean people should take it if they have had a sleepless night because they weren't break even. Palantir is not the only opportunity in town. Okay, you can think wherever you can have better sleep. However, if you are in a situation where you are finding that Palantir is an opportunity, but I want to risk a very little just in case if this run is going to run for 2-3 weeks, and who knows, it can go to 17-18 if it is, because we don't know what's the reason behind it. Yesterday there was not enough purchase by ARC also. Okay, so it's 170 million, 172 million shares traded. So what is driving the volume at this point? We all can say our mind, but we don't know, to be honest. We'll only know in hindsight what happened. So is it the AI train? Is it something else? Is it shorts being squeezed? We'll only know in time. So I was looking at the option volumes. Okay, uh, so I was looking at bar chart. So I said that currently it is 11.7, 11.9. Okay, now there are two ways I could play if I want to sell. I'm not selling. Okay, and I'm not advised. See, if I sell my stock at this point at 11.97,
Mm.
okay, but I go, but there is a chance that we maybe have a rally of 10 days and I could miss the upside.
Correct. Correct.
Okay, so one option I have is that I can go and buy the calls. So I sell at 12, and at same time I buy call at 12. So I'm
Right.
spending 50 cents. So that means if Palantir retrace back from here, I still keep my gain except 50 cents.
Correct.
Okay, and if Palantir moves up, say 17, 18, I keep all those gains with me because I'm having the calls until June. So it gives you a kind of a small protection while keeping your capital safe while risking only 50 cents. The question here is, you can also do the same with puts also, because if you buy the puts, you pretty much lock up the gains here. The problem here is, and you can anyway do that, the puts at 12 is 0.71. So puts are pricier than call at this
Right.
particular time. So basically, what is happening is that, but puts will give you assured cash protection. That means even if Palantir goes back, you will keep 12.
Right.
So that is the 20 cent extra. So if you go to here and, for example, you sell at 12, you keep all the money with you, you spend 51 cents. So any gain that comes, it's yours. Okay. Put will give you the 12 if it goes down. Okay. you will get the protection of the money at 12, but if it goes up, your 70 cents will be worthless. But you will make money in the move of the stock. So this is a kind of a move you can consider. And of course, like what strike price you have to do. I mean, this is something you need to do it yourself. I'm sharing my mind on this trade. I'm not advising anybody to do it. But that kind of trade can allow you to keep cash, whatever is earned up to 11.5. And with 50 cents, you can have a view where you can play for the longer game if you're expecting. But this is a kind of a timely trade. Okay.
Right.
Do not do it if you do not know options. Okay. Do not think about it if you cannot model your risk reward on this. Okay. And if you do not know this and you cannot do all the modeling, take this opportunity more for learning. Okay. Because these kind of situations will come back in market.
So for the average person who's like, average person comes up to you, they have some money in Palantir, they're like, Sachin, I don't know if I should sell it because $12 seems a little ridiculous right now, or I don't know if I should hold. I mean, your advice to them is it makes more sense not to time it and just to keep going on the ride, whether it goes up and down, because you have literally no idea if it's gonna.
I have no idea where it is going. It is going to 7 or it is going to 17. I have no clue.
Right.
Okay. My strategy is not based on where the stock is going. My strategy is always based on what I will do where the stock will go. Okay. So my point here is,
explain that. Explain that. Your strategy is not based on where the stock is going. Your strategy is based on what you will do. What do you mean by that?
So for example, in this particular case, say I decide tomorrow to sell at 12. If I sell tomorrow at 12, I mean, I'll probably buy the calls, because my idea is that I'm preserving the cash. If the stock goes down, then I have cash to buy it back. Okay. If the stock goes up, then I already have my cash with me, plus I have the calls running for next 10 days. So in both cases, my losses are limited to 50 cents. Okay, so the stock can move up and go. So when if so, for example, the stock runs, say for example 17, and 50 cents give me $5, that is 1:10 trade. So
Right.
this is a kind of an asymmetric risk for me.
Right.
Okay,
Gotcha.
one of the reason that I do like covered calls, or I do like option buying or selling, is because I don't know. Like for example, yesterday when I bought the SoFi puts, because my understanding is, personally I feel SoFi between 4.5 range is pretty defendable now with everything that has happened. Okay, so if you are buying at the end of the day, even if you end up buying a lot of SoFi at below 5, I think I'm comfortable with that. Okay, based on price action, I have not done a lot of deep dive on SoFi like you guys have done. Of course, I have guys in fintech, so I get their feedback on SoFi quite a lot. But so this is the idea, like you need to decide beforehand what you are going to do. When I will sell Palantir, I have made this decision in 21, and then I updated this decision in last August. I haven't made any changes. Once the criteria is met, I'll sell the Palantir. Forever, short term, the rules are all up there.
What is your price target for Palantir that you feel comfortable selling it at? Let's say by 2030. Obviously, if it gets to $100 tomorrow, right, you would sell because that's ridiculous. Yeah. But by 2030, what price is it at? Where is there a range where you're like, I still don't think it hit its potential, or I think it's overvalued around 10 years of at that point holding the company?
See, Palantir is still severely undervalued. Snowflake was touching 60 billion market cap yesterday.
Correct.
Palantir is barely coming to 25. Okay, now if you take the AIP or artificial intelligence game at enterprise, which company is better equipped to provide end-to-end solution? It is definitely Palantir. So at that particular time, like when I say that, of course, I know that, the growth has been high, and Snow is a very good company. A lot of time I praise them. But when I see the premium difference between these two companies, it's stupid in my opinion.
Now, Sachin, let me ask you a question, okay? Palantir at $20 is a $40 billion market cap. Is there any world in which you can justify the current, let's say we get to $2.3 billion in revenue by the end of 2023. Could that make sense at all to be a $40 billion market cap and only have $2.3 billion of revenue? Is that from a SaaS perspective reasonable, or is that insanely overvalued from a market cap perspective?
See, we have to keep away the hindsight bias and the recent confirmation bias, because suddenly in the 2 years we are coming where everybody is talking about valuation and everything else, and suddenly
Correct.
everybody is Warren Buffett and Benjamin Graham. See, if you take 20 years and if you take the dot-com bubble, okay, SaaS or software stocks can stay irrational for a long time. Okay. Also, it's easier to ride bubble than to short the bubble, in my opinion. Okay. So for example, say tomorrow Palantir goes to 25. Okay. The question is, what is happening in the broad market then? Okay. Because you also remember, like we discussed it last time, that I am of the opinion that there is a fair chance, the way the AI hurricane is setting up, that we may be entering in a very big bubble, very early stage bubble at this particular point. So think about this, that 6 months down the line, the rates start to cut. Palantir earnings are improving. More companies are coming and saying, that particular time,
we're going to the fucking moon if that happens.
Suddenly what will happen is you were not comfortable buying a company at PS7.
Correct.
And now suddenly you are seeing that company at PS at 100, and you will say it's oversold. It's overvalued. Guys, we are not here in this business to sound smart. We are in this business to make money. So you have to make your mind. Okay. I mean, I know a lot of people, those 3 funny guys who were waiting to buy Palantir at 5. I mean,
no, $3. That was their target. $3.
Yeah.
$3.
So see, guys, you have to be very clear about this. You can say a lot of things that make you sound smart, but you want to sound smart or you want to make money. Okay. And like I said, you have to be aggressive and you have to be defensive at the same time. I will judge the situation when I am there. Having said that, if Palantir suddenly make a 50%, 100% move within a week and I don't understand, in that particular situation, my understanding is that I don't know what is going on. Okay. Then I'll probably use the same kind of trade, that sell the Palantir here, but keep the calls open of the similar position until you understand what's happening.
Right.
Okay. But at this particular point, I mean, see, for example, what happens, like I don't sell here and Palantir goes back. Fine. Palantir has already tested this level. There is already momentum building up.
Correct. Like if it gets back to even $8, your argument is that, we've been there and it could.
I mean, I'll fucking double my position if it goes back to $8 now.
Why? Why would you double your position if it gets to $8?
Because it has already confirmed. See, if you're looking, like I said, the other money I have is based on a technicals and options. So you already have confirmed the momentum. You already have fundamentals on your side. Then it becomes quite a good trade in short term to actually make money over it. See, you need to get the idea, like we have a defensible range we already tested for a while, which is 7 to 8 for Palantir.
Correct.
Okay. When Palantir was there in that range 7 to 8, the company performance has only improved. The company moat has only improved because of the induction of AIP.
Right.
See, that's one of the problem what I see in investing. And I was helping one of my friend who was setting up a hedge fund to build his portfolio strategy, is that people try to learn the thumb rules and then they try to fit the thumb rules to every situation. See, there is a portion of finance which is static, then there is a portion of finance which is dynamic, and you both have to judge at the same time. Okay. June to me is a volatile month for 2 reasons. Irrespective of whatever is happening in debt ceiling discussion, okay, there is a fair chance that we might see tantrums from both parties. Both parties have really some characters that should have never been in the politics at all. So I don't expect it is to go smoothly. Okay. The second thing is markets are pricing that there will be no rate hike.
Yeah.
And Fed are notorious to fuck you at the most unimagining time. Okay. So at this particular time, Fed is exactly the person who wants to sound smart than who wants to be right. Okay, so if they have been saying a logic that job, the unemployment has to increase, if those things, they just cannot stop, and they might be forced to do one more hike. Okay, you put these two things in mix, and then suddenly couple of people in China or in Saudi make a geopolitical statement, then suddenly you get a perfect blender of things,
Right.
and suddenly markets could be very volatile.
Yep.
Okay, so that's what I said. I mean, you need to decide that what you are playing against, and my focus, okay, in this particular time is first to preserve my capital, because we are in a tough time. Okay, and then make money over it. Okay, I mean, like 2021, this is one of the reason I left my full-time job, because I was not able to focus more on investing and trading, because of, I mean, if you're working 16 hours a day, how would you do that?
So do you ever feel any opportunity cost FOMO with your capital being locked up in? I know you're selling calls and puts and you're making money off of it, but do you ever think, like, if I had that money, I could put it somewhere else? Or because look, I was going to tweet this today. I actually was going to tag you in this tweet. You going all in on Palantir, I think finally makes sense to me. Not because you have the best average in the world, but because when you said this in February, even at whatever price you bought it at, the point is you had a thesis. And I remember we were on that first podcast. You were telling me the story about George Soros and Stanley Druckenmiller about, like, if you like a stock, why don't you go more than 100% in, right? Why don't you double down? And now today I'm kicking myself in the ass. And I'm sure 555 people here are kicking themselves as well. Why the fuck was I not buying this at $7, at $8? It was stuck there for 2 months. Why? Like, I knew the potential of this. Yes, we, gap earnings, AIPs, but like after AIP, it was still at 743. Why was I not doing it? Can you speak a little bit to, like, the idea of having real conviction? Because even if you got in a little bit earlier than most, you have that conviction that I think all of us were looking for. And I don't think you get that until you get to a certain age, to be honest, because it comes with maturity.
So, what you said is right. And to be fair, it came very late to me. Okay, but let me just tell you, like, what's my mental setup is. Okay. So, I told you that yesterday I sold SoFi put, made some money. Day before that, I had a similar opportunity to sold Tesla puts. I could have made a similar amount of money, but I waited. The opportunity passed. The Tesla at the money move was quite fast by the time I reacted. So if I go back to that day, I lost the opportunity to make 7-8K within like 2 hours. Okay, so suddenly what will you do? You will hit yourself. I mean, yeah, and that could have been easy money. Yesterday that opportunity came in somewhere else, I used it. So this is what I learned, that the biggest pain in investing is not losing money, it's losing the opportunity to make the money.
And this is what VCs say.
So
it's not about losing on an investment. It's not investing in the next Instagram.
Yeah.
That's where they kill themselves the most, right?
So, and all the best investors I know, they are very comfortable missing a trade. They don't beat themselves up. Okay, so if you miss something, you need to understand why you miss it. That is more important than you didn't make any money over it, because market will present opportunity again. Okay, so if you beat yourself, every time if I say, oh, I should have bought at 8.9, I should have sold at 45. Yeah, I mean, man, I'm not God. Okay, there is no way that is going to happen. Okay, so to me, when I went into Palantir, like I said, I see an asymmetric opportunity, minimum downside, maximum upside. Okay, of course, any company can make mistakes, so there's a definite kind of risk. But then I was looking broad market, and the risk was everywhere else. So my point is, if I put my eggs in 20 basket, but all those baskets are in the same truck, okay, and if the truck goes downhill, everything goes downhill. I mean, everything is correlated.
Right.
Okay, I mean, if you remove some of the earnings, I mean, all the SaaS stocks are actually correlated to each other up to certain extent. Okay, so I said, let me focus on one company and let me focus, I mean, understanding.
But let me ask you this question. Big tech has performed pretty decently year to date. Amazon, Microsoft, all of them.
In terms of stock performance. In terms of stock performance. In terms of actual performance,
Right. So this is the fun
That's a
part, right?
different story.
Because you invested in Palantir because you believe that big tech is eventually going to get disrupted. These companies are not going to be the same that they were in 2010. But the opportunity cost from a stock performance perspective has been in Amazon and Meta, not really in Palantir. How do you reconcile that as an investor, that you could have bought Meta at 88 versus Palantir and still invested in Palantir a little bit later?
See, it's very simple. I mean, I invested in Palantir because I believe it is 10 today, it could be 100 in 10 years. Okay. If I invest in Amazon today, I don't expect Amazon to be 10x from here. So it's very simple, the time frame you have. Okay. I mean, if somebody believes that Amazon can be 20x and Palantir can only be 5x in 10 years, they should be in Amazon, they should not be in Palantir. So time frame is important. Okay. The long-term investing is all about time frame, what you are looking at. Okay, short-term investing is a bit different thing, but in this particular case, that's the thing in the short term also, because short term there are so many things happening, you cannot capture all the moves. Also, you can only capture 2-3, if you're very lucky, in a week, and 5-6 a month. That's it. But if you capture a move in short term like that and you are comfortable with that, you can still make enough money to meet your expenses, maybe even make more than that. So you need to figure it out, what kind of investor you are, and what kind of mistakes you have made in past is very important.